Saving for retirement is one of the most significant investments an individual should make over his or her lifetime. And yet, because it is intangible and for a distant future, it is an investment that is often underfinanced or put off until it is too late. Fortress Fund Managers recently invited executives from all business sectors to attend a pension seminar to take a look at trends and developments which affect how people save for and generate an income in their golden years. Fortress Fund Managers believes that financial security is an essential part of life, and their purpose is to help people realize personal economic stability. According to Pensions Director René Delmas, social security schemes are under pressure around the world as well as here in Barbados, which is resulting in more and more people realizing that they cannot afford to retire when they reach retirement age. Delmas suggests ways to help people make the right choice.
A lot of research has gone into this thing, and it's a thing called behavioural finance. And one of the things that they've found, because it applies to Barbados very much, we can no longer make it mandatory for new employees to join a pension plan. It is optional. And what has happened overseas that they found much success with is that we will auto-enroll you. We will automatically put you on a plan. If you want to come out, you have to write me a letter to say, I want to opt out. And what happens? Nothing. Inertia. Nobody does anything. So you stay in the plan, and you get your pension. When that happens, rather than doing it voluntary, the success rate goes from 90% when it's auto-enrollment to 40%, where it's voluntary, you decide if you want to join up. People do nothing, so they don't join up. So, something to consider. And auto-escalation, we need to put in more in our pension. I will bet that the majority of us here are, in total, are funding at a rate of under 10%. That's not enough. How do you do that? Get people to commit that they'll make 1% additional voluntary in year 1, 2% in year 2, 3% in year 3. Get them to sign it off. Because once it is in place, inertia kicks in, and they just don't bother to change it.
Apart from this strategy, to help people to help themselves during retirement, Fortress has introduced the Fortress Income Drawdown Policy to maximize a pensioner's capital, with the potential for pension payments that keep up with the rate of inflation.
If you and your spouse have other sources of pension, they may, you may work other companies, you've got 2, 3 different sources, you have NAS, you've got other income producing assets. So you're not dependent on this one source of income. You're confident that you can do better than what the insurance companies say that they will give you on your money. And you feel that you've earned your money, it's yours, and if I haven't utilized it, if I haven't used it all up, I don't want to give it to anybody other than my beneficiary. If you answered yes to all of those questions, then maybe the income drawdown works for you.